What is up, you guys? Once again, we are in the car. Everybody is home because of this quarantine, so therefore I can't really shoot videos inside of my home studio, which is what I normally like to do. But the show must go on, so here we are inside of my car. Today, I want to go over 8 companies that I am watching very closely that I've either already taken a position on or I'm thinking about taking a position on. So let's get started. Now before we get into it, make sure you hit the like button, comment on this video, let me know what you think about these companies and are you currently invested in them. As well, hit the subscribe button. We are so close to hitting 700 subscribers. I want to thank you guys seriously from the bottom of my heart for all the support that you have given me. We've only been doing this for 3.5 months and we are already almost at 1,000 subs. So let's keep it going. Let's have a great 2020 and let's get into these companies I'm looking at. Now, as you guys know, I can't say the whole CV issue because I might end up getting in trouble through YouTube because they don't want us talking about it. But I know a lot of people are getting laid off. I know a lot of people are losing their jobs. A lot of people's retirements are getting cut in half. So what I want to do is help you guys out. For those of you who want to take your investing knowledge to the next level or maybe get started in the markets, I am extending my private stock market membership group to all of you for 100% free for 1 month. With that, you will get 100% access to all of the courses that we have out, as well as the private Discord community where we trade live every single day. So if you want access to that, go down to the link below, click it, and use the code FREEACADEMY. All lowercase, no spaces. You will get your first month 100% for free. It is my way to give back to you guys for being extremely supportive this entire time. Now, the first one is going to be Carnival Cruise Line, ticker CCL. As you can see, this thing has been getting pummeled. We're up a bit today, but all the way down to $10 a share right now. And I think that we actually hit $7 or $8 a share yesterday. You can see that the market cap is only $7 billion. That means that if we were going to buy this entire company, you could do that for $7 billion. It's insane. PE ratio of 2.15 and a dividend of 21.5%. Now, you do have to remember that while the dividend is high, this company is going through a lot of troubles right now with the whole situation going on, and they're forced to shut down for 60 days, and there's no cruises allowed at all for 60 days. So that is no revenue. Obviously, this PE is not going to hold up. They're probably going to have to cut the dividend in order to actually keep this company afloat. I don't think that they're going to go bankrupt because I do think that the government will bail them out and help them. They also have a ton of money on the balance sheet. Something to look at with this company is they do have a $7 billion market cap like we talked about. They do have $20 billion worth of debt on the balance sheet. But if you look at the property, plants, and equipment net, they have $40 billion. This means if they just liquidated every single property, plant, cruise ship, equipment that they have, it would be worth $40 billion, which is double the debt that they have and also way worth more than the market cap that they have right now. Now, another reason why I like this company is because they had a strong trend leading up to this drop. Obviously, getting through a situation like this is going to be hard for a company like CCL, but I think that the risk versus reward is there, and I do think that they can get through it. The next company is going to be Uber, and this is a company I have a pretty big position in right now, and it's up almost 40% today alone. With that said, Uber at $20 to $25 is still an amazing price point if you're looking out to the long term. One problem that a lot of people bring up is their path to profitability, but before all of this, Uber, the ride sharing aspect, was already profitable. The only thing holding them down was the Uber Eats, which I think we're going to see a lot of users growing within these troubling times with everything that's going on. And I do think that by the end of next year, this company will be profitable and you'll be mad that you did not grab these shares around this price. As well, I do think Uber will be a leader in the AI self-driving cars. Not to mention, Uber is a data company. Every single time you use the app, every time you get in the car and you drive as a driver, every single time that you order food, get it delivered, they're computing all of this information. And in this time period, everybody knows that data is priceless. So they're a company that I really like for the long term, and I do have about 863 shares, I believe, right now. The next company is the Boeing company. And geez, if you would have ever told me that Boeing was below $100, I would have never believed you. As you can see right now, there's a market cap of $54.6 billion with an EPS of negative 1.19 and no PE ratio because they took a huge loss recently, which is something that we haven't seen from Boeing in I think it was like 30 years. Now there's a lot of negativity around this company because of the whole 737 MAX issue that they still have not been able to fix, the whole China tariff situation, which is kind of on the back burner right now. Dennis Muhlenberg, their old CEO, leaving because of all the issues that they've been having, and the thought that maybe this company could actually file for bankruptcy. Now, I don't see that happening because I think the government relies way too much on them, and I do think that they would bail them out. I like this company where they are right now. I do currently own shares of Boeing, and it's something that I'll continue to buy the further that it goes down. The next company is Wynn Resorts, and holy crap, this thing has been getting destroyed. This is a company that was $200 a share, and very, very recently $150 a share, that is sold off all the way to $47. The market cap on this company is $5.2 billion. The EPS is $1.14. The PE ratio is still a little high at 37.57, and the dividend is 9.3%. We are down at almost the 52-week lows. Fundamentally and financially, this company is pretty sound. I know that they had to force close almost every single one of their locations, which is a big issue. But in the short term, while this can continue to sell off, I do think in the long term, this is a great company to add to your portfolio. Now, of course, they could end up cutting the dividend, and they might have to. It might be better for them to cut the dividend so they can keep this company running smoothly. But that's something that we will have to see moving into the future. Wynn Resorts under 80 is usually a buy for me. Wynn Resorts under 50 is a no-brainer. Moving on, we are talking about Skyworks Solutions. If you guys don't know who they are, they're a semiconductor company that makes chips for primarily Apple, that's what you would know them for, but a ton of other companies. You can see right now that they have a very attractive PE ratio for a company like this at 15, an annual dividend, which is just a bonus, at 2.44%. They're trading around their 52-week low, and the market cap is $13.2 billion. Now, I'm not going to go through everything right now, but if you want to see basic textbook perfect fundamentals when it comes to finances, look at their balance sheet, look at their income statement, and to me, it is near perfect. Now, will they have problems in the short term? Of course, everything is going to have problems in the short term. But right now, with Skyworks at $77.53, I would be scooping it up. Moving on, we have Merck, or ticker MRK. This is a company that is great to add to a portfolio to diversify because a lot of my companies right now that I'm invested in are tech companies or travel companies, which are getting hit the hardest, obviously, but I see a lot of upside to them in the next 3 to 5 years. We can see right now that the market cap is $177 billion, a PE ratio of 18.57 with a 3.41% dividend. It's trading close to its 52-week low, like almost everything that we're looking at. And this PE is very attractive for a company like Merck. They have a good dividend, which I do like. And like I said before, it's a great company to just use as diversification within your portfolio. Moving on is going to be Facebook. Now, of all of these companies, this is probably the safest in my opinion, but it's also going to give you the least amount of reward because I do think that it's still a little high in its valuation for me to start buying. We can see here that it has a $448 billion market cap with a PE ratio of 24.1, an EPS of $6.09. There is no dividend, and it is trading close to its 52-week low. The reason I really love this company is, once again, the fundamentals are solid. I don't see Facebook going anywhere. I would like to see it around $140 a share. I don't know if we're going to get there, but that is where I would start really loading up on shares. And now the final company that we're looking at, I made a video on about 2 weeks ago, and that is the Walt Disney Company. Right now they have a market cap of $170 billion with a PE ratio of right around 15 and a dividend of about 2%. They are trading around the 52-week low, and fundamentally, I love this company. In the short term, they are getting hammered because basically all of their parks are closed. A lot of people have worries with the new CEO, Bob Chapek, and I know a lot of people also are worried about how Disney Plus is going to do moving into the future. But to have Disney at under $100 a share is very attractive to me. You're going to get as crazy returns as something like CCL if it were to come back? No, but this is just a strong company to put in your portfolio and to have some diversification. That is it, guys. Those are the companies that I'm currently watching. If I add any more, which I probably will as the coming weeks go on, I will make a video. If you guys need anything else, comment down below. Once again, like, share, subscribe to this video. keep your head up. We're going to get through this. The whole country's going to be fine, and the economy will rebound. It always does. Once again, I want to thank you guys for watching. Until next time, I'll see you.